Welcome to the Deep Dive. Today we're tackling something really important in modern investing, especially if you're looking into automated trading.
hmm
We've got some interesting material here about, well, smart ways to monitor your trading accounts, particularly when using automated systems, like the kind sometimes mentioned with firms like Faida Ventures Ltd.
Absolutely. And look, whether you're just thinking about letting algorithms trade for you or maybe you're already using them, knowing how to keep a watchful eye is it's crucial.
Right.
It's really about using that tech power, but staying firmly in the driver's seat of your own finances.
Exactly. So our mission today is to kind of unpack this. We want to pull out the main ideas for effective monitoring so that you, listening, can get a clear, actionable way to oversee an automated account without it feeling too overwhelming.
Sounds good.
Okay, so let's dive in. Why is actively monitoring an automated trading account so vital? I mean, if these systems run 24/7, crunching data, shouldn't they? Sort of handle everything.
Yeah, that's the logical first question, isn't it?
Mhm.
But here's the thing. Even the most advanced systems, the ones analyzing tons of data and trading super fast, they're still working within the rules they were programmed with.
Okay.
They can't, by themselves, predict truly unexpected stuff. Those black swan events or sudden big shifts in how the market feels.
So it's kind of like having a really skilled autopilot on a plane. It's amazing, but you still need the captain awake and aware, just in case.
That's a great way to put it. Yeah, continuous monitoring is that captain. It's what makes sure your strategy, the one the system is running, still lines up with your financial goals and, importantly, your comfort level with risk.
Right.
Remember, markets change. What worked perfectly 6 months ago might need, a little adjustment now based on what's happening. Monitoring helps you catch that.
And it's not just about dodging problems, right? It's also about seeing when things are going really well, maybe, or finding ways the system could work even better.
Precisely. Staying vigilant helps you see if, say, the system struggles in certain market conditions. That might tell you something needs tweaking in its settings. Think of the system's results not just as wins and losses, but as, data points. They help you improve things and protect your capital. The insights we looked at even mentioned how systems, like those associated with Faida Ventures Ltd., which run constantly, still need this human oversight, that informed layer.
Okay, I get it. The case for monitoring is strong. So the document we're using lays out some best practices. First one, regular account reviews. Sounds simple, but what should you really focus on during these reviews?
Well, what's interesting is the stress on making it scheduled. It's not just checking in randomly.
Right.
The idea is to actually block out time daily, maybe weekly, for a proper look. Then during that time, you're looking closely at key metrics.
Like what specifically?
Things like overall profit, the profit and loss on specific trades or assets the system is handling, and this is important, keeping an eye on your high watermark benchmark.
High water mark.
Yeah.
That's the highest value the account has reached, right? Sort of a peak performance level.
Exactly. And think of it not just as a record, but as a benchmark. If the account drops from that peak, it's not just a loss. It could be a sign that the market conditions your system liked have changed. So these regular reviews act like an early warning system. They help you spot any weird patterns or consistent underperformance before they become big problems. It's proactive, keeping your finger on the pulse.
Got it. The next practice is utilize real-time alerts. That sounds like a great way to stay in the loop without being, glued to your screen all day.
Yeah.
What alerts are most useful?
The real advantage here is how customizable they are on most platforms. You can usually set them up to ping you email, SMS, act notification.
Okay.
For big price moves, like if a currency pair suddenly jumps or tanks, but maybe even more useful, you can set alerts for your account hitting certain levels.
Like a profit target being hit or a loss level.
Exactly. Reaching a profit goal, great. But more critically, maybe getting an alert if your balance dips below a certain point you've decided is your safety threshold.
So if my account drops below a level I'm uncomfortable with, I get an instant heads up. That sounds like a really crucial fail-safe.
It really is. These alerts let you act fast with information. If the market goes wild or if the system starts doing something unexpected based on your strategy,
You can jump in.
you have the chance to step in, Adjust settings, pause the automation maybe, or do whatever's needed to protect your investment.
Makes total sense.
Yeah.
Okay, third practice. Leverage integrated technical analysis tools. Now, if we're using these smart automated systems, why bother with traditional technical analysis too?
That's a really good question. Because while the automated systems are great at spotting patterns in data and executing trades based on rules,
Hmm.
adding technical analysis using charts, indicators, trend lines gives you a broader picture, more context on what the market's actually doing overall.
So you can use TA tools to sort of double-check the signals the robot is generating, see if they align with the bigger trends.
Exactly that. It's like getting a second opinion, but from a different perspective, the algorithm versus, let's say, human chart analysis.
Okay.
It adds a layer of maybe intuition or experience to the pure data crunching. For instance, maybe a technical indicator shows something interesting, like divergence. It might not trigger the robot itself,
Right.
but if you see that and your robot gives an exit signal, it might give you more confidence to, say, take profits. It can either boost your confidence in the automated strategy or make you pause and question if its actions seem to go against clear technical patterns. Better decisions, ultimately.
Okay. Fourth practice, setting up custom risk management parameters. We mentioned alerts, but this seems more about actively limiting potential downsides beforehand. What tools are key here?
Yeah, this is about defining your risk limits directly on the platform. The main tools usually mentioned are stop loss order.
Right, the classic stop loss,
Exactly. They automatically close a trade if the price moves against you by a set amount, limiting your loss. And the flip side, take profit levels.
which lock in gains automatically.
Precisely. They close a winning trade once it hits your target price. So you secure the profit.
So even with the system trading automatically, I still set these boundaries to control the maximum potential loss and the point where I take gains.
That's the idea. These custom settings are like your essential safety net. They make sure that even if the market gets choppy or something unexpected happens, your potential downside is limited, and profits get locked in when targets are met. It's about keeping that layer of control.
Right. Next point is about staying informed. Stay informed about market trends. Seems obvious maybe, but how does this specifically help with monitoring an automated system?
Well, think about the bigger picture. Even the smartest algorithm is operating within the broader market, and that market is driven by, well, all sorts of things.
Economic news, political events.
Exactly. Economic data releases, geopolitical stuff, just general shifts in how investors are feeling, all that affects prices.
Mhm.
So, by staying informed, reading reliable financial news, doing a bit of your own analysis, you get the context to understand why your automated system might be acting a certain way.
So if there's some huge unexpected announcement and the market goes crazy, knowing about that helps me make sense of any weird performance in my automated account.
Precisely. An informed investor is just a much better place to judge if the automated strategy needs a temporary tweak or maybe even a bigger rethink
Hmm.
because the market environment has fundamentally changed. It's about knowing enough to make smart decisions about the automation, not just blindly trusting it.
Okay. And the final best practice here is maintain flexibility. This sounds like ensuring we don't just hand over everything to the machines. How do you maintain that flexibility?
Yeah, what's key here is acknowledging that automation is efficient, fantastic, but you should never, ever completely give up control. The material we reviewed mentions examples, like services may be offered by firms such as Faida Ventures Ltd., where you might grant trading access, but you still have the main relationship with your broker.
Okay, so the account is still fundamentally yours.
Exactly. And that usually means you keep the power to pause or stop the automated trading entirely, or change its settings, or even, pull the plug on the permissions if you're not comfortable.
So you always have that final override switch just in case things aren't going the way you expected or wanted.
That's it. Keeping that flexibility means you're always the ultimate boss of your investments. You can adapt, make changes when needed, even when using sophisticated automation. It's finding that balance between the algorithm's power and your own informed control.
Okay, let's try and pull this all together. It really sounds like monitoring an automated trading account isn't just, checking a box. It's an active, essential part of managing those investments responsibly.
That really is the core takeaway. It's definitely not a set it and forget it deal. By actually doing these things, regular reviews, looking at that high watermark, using those real-time alerts for price and account levels, maybe using some technical analysis to sanity check things, setting those stop losses and take profits, staying informed about the market, and always keeping that flexibility to step in.
Right.
You build a really solid framework for keeping effective tabs on things.
And this kind of proactive monitoring, combined with the efficiency of automation, it puts you in a much stronger position to handle market ups and downs and hopefully aimed for consistent growth over time.
Exactly. It's about empowering yourself with knowledge and having clear processes. That lets you use the potential of automation while always staying in control of where your finances are heading.
So, a final thought for you listening. As you think about how much automation you use or might use in your financial life, what are some concrete proactive steps you could take, maybe starting today, to make sure you stay informed and feel truly in control? Or maybe just how could adding even one of these monitoring habits change how you approach your investments? Definitely something to think about. Thanks for exploring this with us today.